Right, good afternoon everyone. Thanks very much for attending this weekly market analysis webinar. My name is Jasper Lawler. This is LCG in our weekly webinar. So I'm hoping by this point you've read the risk warning on the screen. So this is my slide on these key markets I'll be covering today. As per usual, if anyone has any questions on these markets or anything else, then certainly feel free to let me know, and I'll do my best to answer that for you. But these will be the markets I'll be covering by default. So let's make this a full screen. So starting with the euro, before I jump back to, so basically I still have a kind of generally bullish bias on the euro. I still think we're kind of in an uptrend based on this weekly chart, but there does seem to be some risk coming into it. We're on a daily basis more in a range trading conditions, I think, until we take out those highs. The longer term uptrend hasn't really resumed, and we have put in by some definition a lower high on a weekly chart. So obviously it's not as a double top, but it's some signs of weakness in the market. We haven't followed through with a lower low, so we're not we haven't rolled over into a downtrend yet, but the first risk sign basically from that lower high. So obviously just referring to this. So actually by one definition you need 2 weeks on either side of the candle with the dot here to define that as officially having put in a high, but certainly 2 weeks of declines, looking a bit soft. Basically, we're still struggling at 120. So obviously, we did push through 120, got up into the 121s, but we failed on this last peak before we even got to 120. So definitely some weakness coming into the market, and it seems like potentially looking at the euro and even the pound, which we'll move on to in a sec, potentially going into maybe a bit period of dollar strength. And obviously we do have the Fed meeting this week, so they're expected to hike rates, whereas the Bank of England and ECB aren't really meant to change, but probably going to give quite a dovish outlook. So if we do jump down to the daily chart here, this is a potential risk factor as we stand. So we're bouncing off the 117.50 level, but if we are kind of characteristic of in a short-term downtrend, we're obviously below the 50 level on the RSI, we're below the 20-day moving average. We'll obviously just put in a lower high and lower low, so it's more of a correction, but it is kind of fitting a few definitions of a downtrend. If the correction is going to extend further, then somewhere around this previous low and indeed the 20-day moving averages is a kind of natural point in which the market would start to fall over again. So about this low comes in here. If I actually just draw a line in, pretty much just at 118 and change, but I think it could get up to 118.50 would be more conservative place for if you were going to short the market. Obviously it's not too far from this little high here, so potentially that we're getting a little bounce back and then a rollover again. So again, it's basically a bit of a difficult market for trading at the moment because the trend is not too clear. We're in range bound conditions, so I think we could extend this little down leg a bit further. And if we do, that again will be some more signs of weakness, that maybe we're headed for a test of the 115 low or maybe even a break of it. In the wider context of why we should still be vaguely positive on this market is that we've broken through this resistance, we've come back, tested it as support, and the default expectation was to rally up and try and hit maybe this 61.8 fib up here on a long-term basis up through the 125 area, but obviously this bit of weakness coming in, increasing the odds that we need a bigger pullback somewhere down here before then maybe retrying to get that uptrend in place. So potentially a bit of a change taking place here, and as I said, that's been supported by what's happening in the pound also. Only had 1 week of decline, but obviously not a good sign because we had a breakthrough on Brexit last week, had that phase 1 signed off, yet the pound closed the week lower, and we're heading lower a bit so far, and some news that Tory MPs aren't too happy with the paying the EU divorce bill. So again, we're over the 50 level on the weekly basis. We're still above this rising trend line. We're still even above the 20-week moving average. It's all still uptrend territory, but there's some beginning signs of weakness creeping in here. And again, just like in euro, it's 120. Really in sterling, it's the 135. It's a big handle that seems to be getting some selling pressure. So this, I think, for me is the line in the sand, the 133 mark. So that's where naturally, where you've already seen it happen, where we had the breakout, came back to the old resistance as support, had a nice little rally off it, but we didn't even get to the old high before we had a bearish engulfing and just completely undid those gains. So, you know, this candle was very bullish, and you'd expect it to push up towards the highs. The fact that it was completely cancelled out in the next day was quite a bearish sign. It is quite a bearish reversal signal. So my expectation now is that probably we do take out this support, and it, you know, at that point I probably won't be looking for buys in the market anymore. But obviously, you know, the next logical point of support would be that one sort of 32.25 area down where this spike low. Obviously, when you have a big long wicked candle like that, you can see there was a lot of demand there, and probably all that demand wasn't absorbed. So if we do get a pullback there, you know, there'll be some of those orders lying in wait to try and get back in at that same price. So that could offer some hope, but for me, the uptrend looks strong if you get the bounce off the old resistance. It's not a strong uptrend once you're falling through the resistance, and probably, you know, you're heading down for a test of the 130, and that was what I was asking in the slide. Do we have a test of 130 coming on? Potentially, you know, we're still in an uptrend, but looks like a spot of weakness. Switching gears to dollar yen. So just like we were saying that the pound and euro look a bit soft, dollar looking strong, and it's looking strong against the yen too. So I mentioned last week that we had this bullish engulfing candlestick on the weekly basis. We followed through on it last week. And then you can see on a daily basis here, we've basically come up, made a little rally, pulled back only about half of it, we've rallied up through. So then, you know, if the strength of this uptrend is to continue, then 113 would be the first natural, the old high, you know, the old resistance turned into support and a pullback. But maybe more conservative entry would be more like 112.50, which is where we kind of had that bullish day engulfing there. You can see if you pull back to this level where we had that little breakout through those two candles, would be another possibility. And, you know, just expecting 112 to hold at this point too, and then we get a run up at the highs at 114.50. There'll probably be some supply up at 114.50, but it's looking quite promising that maybe this longer term uptrend is resuming. That's what I'm saying, is a breakout of the 114.5 coming. It's starting to look like it. So switching gears to equities, start with the UK 100. So again, a bit of a kind of similar idea where we had that big bearish engulfing candlestick, where that looked very ominous for the market after a couple of big weeks of declines, an inside bar, then a bearish engulfing after the inside bar. That was quite a decent bearish setup, but obviously, like I always caution, we're in a pretty solid bull market for stocks, so, you know, the bearish setups aren't just going to play out as well as they might normally, and we've seen that already. So this is basically a tweezer bottom with two quite long low wicks, particularly this last candle, showing that strong demand in this area, and that's why you can see we're pushing higher again today. And it looks like, obviously depending what sterling does, but you know, here was the downtrend, right? Where there was the support, the low, came up to the old support, found resistance at that. That's all kind of downtrend characteristic stuff. But then here we tried to sell off from the old support as resistance on a number of days, but just weren't able to do it, right? And put these lows in here on the daily basis. You can see the equivalent of those weekly lows, and then we had that strong rally on Friday, and I think that's changed the game. So we're finding resistance again at the same low, but I think probably we do push through it. It looks like we've turned a bit of a corner here in the FTSE. We might be in for a re-challenge of the record highs. So that idea is supported a bit by what's happening with the DAX. We've been consolidating for 4 weeks now, basically between the 12,800 and the 13,200 mark, but we've seen some decent long candlesticks off the 12,800 mark on a daily chart. You can see just every time it wanted to come down there a lot, but every time it just got bought right back up. And we had a little false breakout, the 13,200 last week. So we could head back into the range here. That's what we're kind of starting to do at the moment. But to me, it looks like quite a strong market. I'm imagining that we get through that 13,200 and then we're up into new record highs again. obviously, you know, once we do get a breakout here, the next test will be that 13,500 mark. But we've had a decent pullback, so the next time we get up there, you know, I don't imagine it's going to be a double top, and then you get pushed through and the uptrend resumes. Wall Street, obviously, very strong looking market. We didn't even get down to the 24,000 mark. People stepped in at 24,100, ended up being the kind of round number that people were paying attention to. And so obviously just a strong rally up, corrected for a couple of weeks, and now we're up into resuming the uptrend again. So of course we can roll over at the high, but probability suggests that we continue the uptrend, even though we are very overextended. Obviously, we pulled back over the overbought territory. We haven't pulled back out of overbought yet, so maybe we are due that. So if we were going to stall out around the high, then obviously you'd look for another pullback towards the 20-day moving average before then looking to get long again. Okay, switching gears to metals, and I've skipped away from the slide a couple of times here, but there's the support and resistance kind of zones we're looking at. Clear enough from the chart, though, I think. Gold, so hopefully if you watched my snapshot video from last week where we had that, if I drop down to the daily chart, where we had this breakdown through the rising trend line, and I did a snapshot video about it and said that we could be opening up for more declines, and you know, we did see some pretty hefty declines on, I believe that was Thursday, was that? No, I think it was Friday, because there was quite a lot of good news out on Friday, and I'd been saying before that actually gold was holding up relatively well despite all the good news, but we had a flood of it with tax reform and Brexit, and the banks were rallying on some changes in the Basel III regulations. All of it came together, and gold finally did break out lower. And to me, that just doesn't seem like too much in the way of support before we get right down to 1210, which was the lows from that the last correction. You can kind of see here on a weekly basis, it's that 1210, 1200 mark that's been support on consistent occasions. There's a bit of a vacuum in between. So, you know, obviously we're at the end of a kind of long bearish week. So the risk to reward of selling right at this point, maybe not perfect, but if we were to get some bounce up towards the old lows, you know, support term resistance kind of idea, then 1260 seems like a logical resistance where this downtrend could resume. Switching gears to Brent, you know, we were looking briefly like there was a potential. You can see it better on the daily chart. There was potentially a little bit of a kind of double top happening, but it wasn't much of a steep pullback that you'd normally associate with. Topping patterns normally have quite a big pullback, rally up, and then a deep pullback again, and eventually take out the neckline. This now looks a bit more like a consolidation pattern, more like just a bull flag kind of pattern where we've had the rally up and then consolidate, and then it looks like 64 is going to break out to the top side. We found support in the RSI at the kind of basically the same level we had been for a while. This just through the 50 mark and off again. So for the time being, obviously a bit range bound, so there could be an opportunity to sell down from 64 again, but we've already been up there twice, so probably the chances of that continuing to work bit reduced. Now we're going up there for the third test, so assuming a push out through 64, and then if we did get a pullback to 64 after a breakout, then that would be quite a decent setup, I think. Right, so that's pretty much all the charts covered right there. I think I'm going to call it a day at that point. Thank you very much for attending, everyone. Hope that was useful, and good luck with trading for the rest of the week. And if you do want to watch this video again, we'll have it up on YouTube in just a jiffy. All right, thanks a lot, everyone. Jasper signing out.